Hello everyone, this is Teddy Kecksteff from Forex Trading Unlocked, and we are here on Friday, March the 6th, 2020 with a daily Forex market analysis and live trading webinar for you. And we're going to pull up our disclaimer real quick just to remind you that this is for educational and illustrative purposes only. That is it. Okay, so now we will get into our webinar here at forex-trading-unlocked.com. We're on the website. We already have the workstation page pulled up, and we're going to skip past the numbers, even though there are some big ones for the Japanese yen coming out yet still today. The big news is the dollar's getting crushed today. I mean, this is the second Friday in a row where it seems like Friday, and especially as the other markets are closing and done for the day, the U.S. markets are just terrorizing the currencies. So the dollar is getting crushed. Like, I mean, look at this. We have the euro is back at 113.46. The low today was 112.11. So that's just crazy. Like, we have not seen this kind of momentum, volatility, or ranges in the euro in, I mean, it's been very, very long time. So it's going to be very interesting to see how this bull progresses, because it just doesn't seem to want to let up. We've had one down day and one neutral day in the past 3 weeks, and this is quite the rally that we have going on. As you can see, we came out of this range that we were almost pretty much in for. I mean, look at this from October, let's see, the middle of October, the beginning of October, all the way until even the beginning of February. We were in a range where we were from 109.5 to 112 even. So you're talking about not even a full $3 range. And then since then, after we had this nice little drop off, I mean, we're looking at the low from on February the 20th of what is it, 107.77. So that's quite the rally that we have going on here. We have almost a $6 rally from the bottom. So this is we have not seen this kind of action in this currency in quite some time. And remember, the euro is the biggest component in the dollar index. That's why the dollar index is obviously inverted and looks like kind of almost like the opposite of what this chart looks like. So our key pivot is $1.1096, which is quite a ways back with this volatility. It could be there in a day, who knows. But everything above here keeps this market in a neutral to bullish posture. We are no longer on a bear campaign. It doesn't really make sense because the fundamentals for the euro are very weak, and especially with their economic numbers. There's nothing to really support the euro to have it going as high as this is. Is it an overdone move? It's hard to tell, because with the coronavirus, you would think that this, especially with what's going on in Italy and throughout the EU, that you would think that this would not have quite the support in the euro that it does have. So right now we don't have a signal. We've already ran out of our long trade a while ago, and we are just watching this like a balloon underwater rally going on. This is crazy. So for all of you aggressive bulls that have been able to hang on and didn't get shaken out in this little spot here, I mean, who would have thunk it that this that the euro would be trading here at 113.38 as we're talking right now. Pretty impressive, the strength of this market. Now let's go and look at the other European currencies and see how they're faring today. Another sign of strength and another big component of the dollar index is the British pound US dollar. And as you can see, this market has been in an overall uptrend for a very long time. Last 4 months pretty much sideways. In the last few months, it's been in a sideways to lower trade. Now we have made progressively lower move lows and lower move highs. We have now taken out this downward sloping resistance, keeping the trend intact, as well as having taken out this last lower move high. So now we have a lower move low followed by a higher move high. Does that mean that we're bullish the pound? Not necessarily. What it does mean is we are definitely on the neutral path. We're not so much bearish anymore. Maybe a good solid base has been found, and we will maybe just see a very big wide range trade for a while here. So I wouldn't be too aggressive as a bull. However, right now you are in good shape. Bears, I'd be very careful selling into this rally. We definitely have crossed a barrier here. When the pound gets volatile and the pound starts moving, You got to be definitely, and it trends very, very strong. So you have to use a lot of caution selling into counter trend moves. So what I would do is, if anything, wait for a sell signal before you start to look to become bearish on this one. If you're long, then I would say look at this momentum. I mean, we have, today we opened up, you barely even spiked a little bit lower than the open. So it's a lot of buying momentum going in here in the British pound US dollar. So is it the dollar weakness that's happening, or is it all of a sudden strength coming into these other currencies? I think that right now we have dollar weakness. I think it's a reaction and a reflection of what happened with the Fed's interest rate moves a couple days ago, and the overall market absorbing what is going on. And then we also have to look at this little gem of a European currency. The bull of bulls is the Swiss franc. I mean, this market has been a bull against most currencies for quite some time. The dollar it struggled with for a little while, and now over the past few weeks, it is just unwinding. I mean, we have volatility in the euro, but this is a big move to go from a high, what was this, of 98.48, and now we have a low today of 93.18. That's a big move in the Swiss franc. A lot of strength. And the question is, do you want to be a bottom picker here? Absolutely not. If anything, we have a sell rally forecast. Unless you have a very valid buy signal, I think you should use a lot of caution trying to buy into this. If you're going to trade against the lows, I guess that's what you do. Take an aggressive stance, but I would use caution and be very mindful of the fact that you may not get much of a bounce yet. This bull, or for the Swiss, that is bear for the US dollar Swiss, is quite aggressive and doesn't seem to want to let up right now. So we'll see what happens over the as the close comes this afternoon, giving us an indication of how next week will behave. And then we'll see also what goes on with the coronavirus and also some other things that will be shaping up next week. But right now, the momentum for a second Friday in a row, this is absolutely crazy because here's Friday, Thursday, Wednesday, Tuesday, Monday. Here we were last Friday. We were trading just below 97 cents, and now here we are at 93.40. We've had quite the drop in the past just 2 sessions, let alone this week. So be very mindful of this momentum and be cautious if you're trying to trade the counter trend. And for you bears, well, just keep lowering your stops and ride this wave. Who knows when it's going to end? But right now, absolutely be cautious trying to be a bull. Another market where flight to quality seems to be going is the Japanese yen. Look at this one. If there's a market that's gotten hammered, it's this one, the volatility, and this is craziness. If you look at how the rest of the yen had traded for months on end, and then literally in the past 3 weeks, since the middle of February, or the last, middle to end of February, we have just been swinging and swaying without a doubt. I mean, even on an intraday basis, the yen has had, it's fooled the bulls and fooled the bears, and I'm sure that even along the way down here, except for those very patient bears that have held on and had their stops pretty wide in the initial break, I think some bears may have had some trouble with this move. Maybe there's been some people that have picked it off, but I think there's been plenty of opportunities to have sold this market in the whole, taking a lot of heat, unless you have deep pockets and are risking way too much more than you should be for your potential reward. I think they got chopped up. So that might also be one of the reasons why we've gotten so volatile, is because as this momentum does build and people don't adjust accordingly, all of a sudden all the tight traders that here for months had very little risk on whether they bullish or bearish, all of a sudden here, probably over the past, especially week and a half, 2 weeks, probably didn't fare so well. So right now, wait for a signal if you want to be a bull. If you're a bear, keep on working it. Right now, we just don't have anything to say. The volatility is so extreme. We're heading into a weekend. We don't want to go long or short into the weekend or initiate a position unless you really have a good idea of what you want to do and it's part of your plan. And right now, we don't have a signal, and we definitely want to see how the weekend shapes up. Very violent move in the dollar after the dollar had been so strong for 6-7 weeks almost, and in the past 2 weeks we have had quite the reversal of fortune, especially in some currencies where excuse me, the US dollar, Japanese yen had been a bull for so long, and no matter what the dollar was doing, even when the dollar was weak, the yen would sell off for a little bit and then all of a sudden reverse gears. Like that was what was going on during all this period here, especially back here at the in the end of 2019 when the dollar was getting, you know, it was definitely under pressure in November and into December. So, and this market kept on grinding higher, and no matter what, dollar weakness would come in the U.S. dollar yen, boom, it would rally. So what can we do with it? Like I said, we're going to have to wait for it to close today and then look for a trade in the beginning of next week. Now, one indicator as to what is going on here, there's markets that are starting to catch up. The yen has obviously had strength versus dollar for quite some time. It's starting to be reflective in this trading zone. Now, the one funny little thing about this is that the Australian dollar right here, if you look at this last swing point here, this last lower move high around 67.54, and this low here at 64.30, from this little correction we have going on right now, this pretty much puts us into our target area for a correction from that little slide, just for that wave down. Now, if you put it all with this last higher move high back here at the end of 2019, and then bring it into this low here, well, then we have an upside target for a corrective move right around our pivot here of 67.54. So with the yen constantly battering lows and the U.S. dollar obviously being under siege, some aggressive bulls right now, you might be basing and have yet another wave higher and get a challenge somewhere near that 67.54. Not that we're overly bullish on this market. The thing is that right now the trend is definitely lower. This is being to be considered a corrective move higher right now, but the momentum should run out of gas right here if this trend is truly strong. Now, if the yen, that trading zone, starts to balance out and there's actually more than just a corrective move, well, that would help to give lift to the Australian dollar. So for range traders, I think you got some good opportunities, especially buying into lows and selling into newer move highs, because I don't think they're really push on like the yen, like how the yen is hammering support. I don't see Australian dollar just piercing resistance in a very, very big way. I think it's going to be a grind. And just to give you a little bit more of a clue as to how this trading zone is working out and how this trade is working out, let's look at its counterpart. Now, the New Zealand dollar, US dollar, doesn't have such the fundamental weight going on it as it does in Australia. This market also is pretty much reached its target from where this last swing lower move high to this current low is. Now, if we have, once again, this last higher move high up here back at the end of the year down to this low, that also puts us into this target zone right around this pivot of 64.90. So we have a little bit of tandem going on between the New Zealand dollar and the Australian dollar when it comes to the US dollar. And if we're going to fail, we're pretty much in that zone. So I think you're going to get a lot of your a lot of bears start to jump in and start selling into this current region where we're at right now. Now the question is, will strength prevail or will short selling prevail? If, like I said, from the recent wave lower, if that holds, then yes, we're going to probably see this the New Zealand dollar as well as the Australian dollar start to stall. Now, if the U.S. dollar yen all of a sudden gets a bounce and begins to rally, that will probably have an impact on these two currencies that we're looking at. And then I think you will see a very quick turnaround. So I would say right now, instead of using the dollar index for an indicator, if you're trading the New Zealand dollar, U.S. dollar, key off the U.S. dollar yen. As they continue to hit support, I think this is going to continue to rally and pressure resistance. If we get a buy signal in the U.S. dollar yen and all of a sudden there's a halt on that trade right there and a turnaround of events, making it bullish again, then I think the New Zealand dollar, US dollar for sure is most likely going to resume its overall trend, which is lower. Now remember, this market was in a nice bull market for a while. The coronavirus has definitely been one of the biggest impacts that has driven this market lower. If the coronavirus impact is not going to be so severe globally and what have you, then this market has a really good chance at getting back up and continuing a very overall bullish trend in the long run. But we have to see how that's going to pan out first. I think we're right now, no matter what, for the next 3 to 6 months, until there's any real reinforcement by economic numbers saying that the coronavirus has not impacted trade and the markets as much as the fear, if you will, has, then we will have a whole different story to look at. But right now, we are still looking to find weakness no matter what. Strength right now doesn't seem to be able to be something that can sustain itself. But you never know. Right now, the markets are trending very strongly the way they are. Now let's look at the U.S. dollar Mexican peso. We have a lot of kids going on spring break from the U.S. And look at this. Once again today, the market rallied higher. Okay, now this is actually significant here. The U.S. dollar is back at 20 pesos to the dollar. It was trading right around 1860 back here. Just, what was this, 2 weeks ago, 3 weeks ago? What a big rally. I mean, this market had been grinding lower and grinding lower for months on end, and this thing just has exploded. And even the last two sessions, this market doesn't typically have this kind of volatility, this kind of strength. All I can say is there's some very, very big selling pressure in the U.S. dollar. And this thing, the funny thing is, while the dollar was strong, this market was actually, when the dollar was weak, this market was strong. Now the dollar is getting hammered again, but not against the U.S. dollar Mexican peso. It's crazy. So right now, if there's any strength in the dollar, it's against the Mexican peso. What do we do with it? I don't know. Right now, this is just, the swings are so wide, the volatility is so crazy. If you're not already a bull in this trade, I say you just have to wait for a setup. So we don't have much to do on that one, especially going into the weekend. So if you're already flat, guess what? I think your day is done for the day, and also you can start your weekend because there's not going to be any real opportunities. And I would stay out of the day trading nonsense with this as the U.S. markets are closing. All right, now we have this market here. We have the U.S. dollar, Canadian dollar here. And we have two purple lines here, and you can see the market is trading right here at 34.27. The reason we have that highlight is because we still have our options on that expire in 4 hours. We have the U.S. dollar, Canadian dollar is greater than $1.3375, and the same currency cross is greater than $1.3425. We are short these options because we had a sell signal that still is intact. However, with time not going on our side anymore, we may not be able to see a profit in both of these options. Now, right now, we are right at the 34.25 strike price. If we settle below, obviously, any of these price strikes, since we're short, we will be a plus in the trade. Right now, with where the market's at and the strength that's holding up, it looks like we are not going to see that profit. So it looks like we may be seeing a loss on this trade. We also have the short in the currency cash also from $1.3335 and $1.3409. So we are still short these. We had the better opportunity from the sell signal here that we had at the what was it back on? What was the date for this sell signal? On March the 2nd. So that was 4 days ago. And we still have not taken out our risk here at $1.3464. So our Forex cash position may still be okay. We'll see how it handles the weekend and today's trading, as long as we don't get this rally above here, because once we pop this point, we'll be stopped out. But the sell signal is still intact, so we're taking some heat on two positions. The options, we're going to run out of time today, so we'll see. Maybe we'll get a slide this afternoon that brings this market back down towards the lower strike price, and we'll at least get kind of a wash on the trade. So right now, we have these two, let's see, we have 4 hours and 28 minutes left on this position. So we'll see what happens, but it's not looking too good for our binary options positions today. So not as good as last week's were. But we do have some key pivots. We've been making higher move highs and higher move lows. Our sell signal here is the one thing that would set us off and give us newer move lows, especially, and if we get a turn now and our at least our Forex position in the outright cash becomes profitable, that means that this market is back towards these lows and making newer move lows and taking us off the rally campaign. Now, the U.S. dollar is failing against all these other currencies. You can see it's stalling versus the Canada. Obviously, with the peso, it's like a balloon underwater. But as a whole, we're not getting very much support for the dollar today. You can see that we are now here an hour after the stock market is open. The equity markets have been swinging around crazily this week. And the dollar has been just under pressure, especially under the major currencies, the pound and the euro. Once again, let's take a look at that and see where that is going since we started out the webinar there. And as you can see, it's fallen off those highs since we started talking at the beginning of this webinar. We've come back every bit of, let's see, we were up by 113.40, so we've come back a nice little way here. So it looks like the dollar is starting to see a little profit-taking break right now. Could be just a short-term reprieve for a little bit before it makes a run for newer move highs. So we'll see what happens. But it has been quite the run-up. So for any long-term bulls that have been in this market, especially going in front of the weekend, and with, like I said earlier in the webinar, the euro has fundamental reasons to be lower than up at these levels. So we'll see how this pans out and see what's going on. And we'll take a look at one more market real quick, something we've been watching for the past couple weeks. The US dollar Turkish lira, it's just bobbling around here, and the dollar doesn't seem to be getting after the dollar had quite the run against the Turkish lira even today, while other markets are also hurting the dollar. So is the Turkish lira. Not quite like the other ones. It's not making newer move lows. I think overall this one here, you have to be careful being too much of a bear. I think that it's had its little correction, and now this market here is going to probably make another run for new highs just because of the dichotomy of where Turkey is and what's going on with the coronavirus. And let's look at the British pound real quick also and see, since the euro is pulling back, the pound is not. Okay, so that's showing you that the euro, as you can see, may be running out of gas, and that might be the precursor to what's going on, but it also may be just profit taking. So all these currencies are crushing the dollar today. We don't have any signals. We're going into the weekend, so if you don't already have a trade on, you're not working it, I would say take the rest of the day off and see how the markets close, and we'll come back on Sunday and see how they start to shape up and set the new week forward. So as we have closing down this week, just remember that this dollar seems to be in play in a big way, and here we are on the second Friday in a row where volatility is just kicking up its heels. So with that being said, I want to thank you very much for your time. Please subscribe to our YouTube channel, and always check us out at www.forex-trading-unlocked.com.